videos is that we trade the 1 hour trades. We use the 4 hour to find supports and the 1 hour to find support zones. And now that we understand that we're waiting for a 1 hour green moon for an entry trade, which is here, and a 1 hour green trend for a second entry trade, which is here, we've set our alerts and we're ready to go. So we have a trade that we're going to make and get in. Now, the secret is to maximize profits, and you do that by understanding how to jump a trade or get into a trade before and during the triggers. As you can see here on my left, I have XRP 1 hour moon alerts, which is just an email or a text message that right here, XRP 1 hour moon. That just lets me know that there's a trade happening on XRP, and if I want to get into it, now would be the time to get ready because a 1 hour green moon is coming. Now, what I want to do is analyze the 1 hour green moon and see where that is. And this is by going to earlier time frames. So the earliest time frame that we can interact is a 15-minute, right? And the reason why is because we have three things that we do. We trade with the 15-minute RSI bottoms, and we buy in when they're bottomed, right? So for instance, here on the money line, we can see that there's two moments during the 15 minutes that we could have bought in, and this would be one section, and then this would be a second section, right? This is what we call buying the bottoms, right? Now, we can also see that that's on the money line, and then we also have what's called the relative strength index, right, the RSI, and we can see that there's two sections on the RSI that we could have bought into this trade and what we call purchasing. So these two sections here would be where we would buy. So if we have an alert on a 1 hour and we know that the 15-minute has hit bottom and crossed over, we would buy in this section here, and then when it pulls back down, this would be another buy. That is what people call cost average buying, or buying into your position. And it's good to know that, because sometimes if you're buying into a trade, you want to buy at the best positions, and if you're buying, you don't want to buy when the RSI is already up. So one rule of the thumbs is we don't buy when the RSI is already moving up or already on its way. So we're not going to buy here, which is kind of where we're at here. So we're not going to purchase in this zone here. We're going to purchase when the RSI comes back down and finds this level in here, and then we'll be buying in this zone here, because we just want to make sure that no matter when we buy, we're buying with the momentum of the trade, and it's at least when the 15-minute has giving us an opportunity. So here, and then the next one will be somewhere where this comes back down, or this RSI comes back down, and it would give us either a rejection or a buy, maybe somewhere in this zone here, and then we'll be buying for that bounce, right? But understanding that we're in no hurry here, because remember, the trade that we're entering is a 1 hour green moon, and that hasn't happened yet. But what we're doing here is we're analyzing how to get in this trade and prepare to see if this trade even is a trade, right? And the first thing to understand is, if a trade is a trade, right? And what we're going to do is use the 15-minute, get a little more volume explanation here to understand what's important here. I'm going to go back to this original trade here. And as you can see here, the trades that happen, right, which are important, are the volume areas have to be above the zero line, right? When they're above the zero line, they create movements to the top, they pull back, and then we normally look for a push right there, right? And you can see here that we're not really getting the things that we need, the 1 hours and stuff like that, to create that trade. And that's why it doesn't do as good as it should. And then over here, we have another trade here where we can see that the volume breaks above the zero line on the 15-minute. There's a pullback, and then there's another push, and then it finds support, and then there's a big move to the top. So you can see that when the 15-minute volume is up, stays and finds support above the zero line, is our best opportunity to actually make money on the trades that we want to make, because that's showing that there's enough volume in here to move the trade. This is why, trading on higher time frames is important, because the higher the time frame, the more volume, right? So if you move down to a lower time frame, that's going to let you know that there's volume, but it's at a lower scale. And we want to operate on higher percentages of volume and price action, which allows us to operate and take advantage of the bigger moves, right? This is why we trade the 1 hour. Now, everything that we want to happen on the 1 hour is going to happen on the lower time frames, just multiple times as it builds up. So for instance, there are 4 15-minute jumps and bumps in every 1 hour trade. So we want to see the momentum start building for the 1 hour trade to happen when this all happens. So you can see here, we've already had a 1 hour moon marked here. Now on our other chart, we can see it. There's a reason why we put these lines. So this is where there was a 1 hour right here. There's a 1 hour moon. We can see by this yellow. And then there was a jump, and then there was a pullback, and this was the 1 hour trend. If you notice on the 15-minute, when the 1 hour moon came, the 15-minute had broke positive value. It then consolidated and it pulled back the RSI here at the bottom. Remember, we'd be buying at the bottom of the RSIs. We would have got into the trade in this area here, and then the trend happened, and then boom, we would have caught that spike. Very easy, and this is why we have these lines. These lines are basically put to show you where the moons are, right? What I mean by that is this. Let me go ahead and mark this off for you so you have a clear understanding of what we're looking at. And it's very simple, right? If we go to our 1 hour moons, and I'll simply mark them here. This is our 1 hour moon. All right, this would have triggered a buy zone. And then the 1 hour trend, which happened here, would have triggered our second buy zone, right? And now when we move down, we have another trade where we can see that there's a 1 hour moon. And then there is the 1 hour trend, which happens here. And that's our 2 buys again. And then finally, since the trend stayed green, we can see here that this was the other 1 hour moon. And then we can see here that we have another 1 hour moon. And what we're looking for at this point was another entry to a trend that didn't happen, and that's why we had the pullback. But now that we know that those mark those areas, let's take a look at the 15-minute so we can understand how that works. So let's go to our first entry here. And we can see here that this area is where the 1 hour moon hit. And as you can see, that's when the 15-minute actually broke positive value, right? And what we'd be waiting for is, we don't want to buy at the top of the 15-minute RSI. So what we have done is that we would have waited for the 15-minute to get to the bottom, and that would have been a target to enter. And then our second target would have been here, right? So notice how that hit us with a beautiful buy-in right there on the 1 hour trend, right? See how the trend hit right there? So that 15-minute buying into the momentum would have had us in here at this trade. And then when that 1 hour trend hit, that would have given us our spike that we wanted for that big move that we had. And then taking advantage of that spike, we should always be aware that once we make money and hit our profit zones, that we have to respect pullbacks, right? And you can see here that the 15-minute RSI had a nice little pullback, which came down to here, and this would be an area, if we were still looking to purchase, we would be buying in the trade in this zone here and making this next move here and calling it a day, right? So first buy, push, second buy, push, but that's the most you can do, because at this time, the 1 hour moon had changed, the 1 hour trends have changed, but inside of this box here, the 1 hour moon created a buy zone. And then right here is where you would buy the 1 hour moon entry. When the RSI on the 15-minute came down, you would buy here, and then you take advantage of this big spike. And that's really all you need to do at that time, was take advantage of that move, and that pretty much ended it. If you buy a second move, it would have been here, and then once the RSI hit the top, then you would close that out. But in this particular zone here, you wouldn't buy this second entry because you have a 15-minute red moon, right? So since the 15-minute red moon exists at that time, then you would just simply close out of your trades, which would have been that beautiful trade right there. And we'll get a little more into that, but we don't want to trade against our 15-minute RSI, and we don't want to trade against our 15-minute red moon. Now over here, the same example is, there was a 1 hour moon that triggered here, and you can see here, there's a 1 hour moon. Now, if you would have waited for your RSI to pull back, right, and come all the way back, you can see the 1 hour trend hit here. So you would actually be buying into this 1 hour moon, right? And then your other buy would be your 1 hour trend, right? So these are two purchases here. And if you waited for that to pull back, right, you would have been looking at a 15-minute red moon, which doesn't allow you to buy here until the moon goes green. And you can see that that section is right in here. And that puts you at that same level, that same buy-in area that would have existed. And then you're just riding that out, right? So this is a little bit understanding of how to trade with your 15-minute or to maximize. Now, sometimes a lot of people will look and say, well, my 15 minutes high, I'm going to wait. And this is a perfect example how over here, when that 1 hour moon triggered, if you would have bought in properly here, right, and then the 15-minute pulls back and you buy here, you ended up making a really good move and you caught that big one. But then on the next move, if you wait for the 15-minute to pull back, you actually miss the move, right? So that's why the understanding of you're trading the 1 hour alerts is important, because when the 1 hour hits, those alerts are more powerful than the smaller time frames. So when this 1 hour moon triggered a buy, you buy, right? Even if your 15-minute RSI is at the top, because your main alert triggered a buy. And then on this second alert, which is the trend, you buy again, right? And that would have basically, that's your trade. Now your 15-minute allows you to kind of have moments where if you buy the 15, let's say you buy the moon alert, and then the 15-minute RSI then comes back down, this is where you can increase your position a little bit more here and then ride that next move, right? But the key is that you have to buy when you get a 1 hour moon, and you have to buy when you get a 1 hour trend, because those are your trades. The 15-minute is more of an ability to get in the trade before the moon and the trend. But once the 1 hour trade hits, then that is an executable trade. And that's where I think a lot of people get confused, is that they wait for the 15-minute to reset and then they don't get into the main move. What they don't realize is that the only time the 15-minute is relevant to getting into a trade early is exactly that, early, meaning before the moon, before the trend. But once the moon hits, you're in. Once the trend hits, you're in. Once the 1 hour hits, you're in. The 15-minute is the ability to get a second entry or to add to a position during a current position at a better rate. Meaning that if the 1 hour moon hits here and you buy this position and you wait for the 15-minute RSI to pull back. So let's say you do a 50% entry on the moon entry. It goes up, it pulls back, and your second entry is when the 15-minute RSI hits the bottom and you put the other 50% of your trade here and you take advantage of this next move, right? Because you always want two entries. The first entry is 50% of your bag. The second entry is the other 50% of your bag, and then you're fully in your trade, and that's the end of it. That works out perfectly for you because you get 50% in, you get your second 50% in, and there you go. On the next one, you get a moon entry, you put 50% in, your trend hits before your RSI hits, you get your second entry in here on the trend, and then boom, you make your move. So in this scenario, you didn't need the 15-minute to pull back because the trend had already given you your full trade and you've already made your profits, and that's pretty much it on there. So that's where you have to understand, is that the 15-minute or the lower time frames are used to get better second entries or pre-entries, right? But they don't dictate the main trade, right? So once again, the entry is the 1 hour moon, the 1 hour trend, right? Now, if the RSI on the 15-minute hits the bottom and starts to head up before the trend, then you can take an earlier entry over the 15-minute trend or the 1 hour trend by taking the 15-minute RSI entry, which is here, right? So 1 hour moon entry, 1 hour trend entry, 1 hour trade early entry comes off the 15-minute RSI bottom. Okay, so enter on the 1 hour moon, it pushes up, there's a pullback, the 15-minute RSI starts to head up. You take a second entry. Or if that doesn't happen, you get a 1 hour trend and then you take your second entry. So those are your entry points. First entry is the 1 hour moon. Second entry is the 15-minute RSI bottom or the 1 hour trend trigger. Both those trades give you that second entry, and that's pretty much it. When you go to this trade, you have a 1 hour moon, that's an entry. Over here, you got a 1 hour trend, which triggers a second entry, and that's the end of it. Doesn't matter that the 15-minute RSI didn't reset because you have already got a trigger of the trend, right? Now, as we move down here, we have a 1 hour moon entry, right? Which is here. Then when it pushes up, we don't get a 1 hour trend entry, right? Which means that we would do 50% on this entry. And then when this hit here, this would be the second entry here. And that would get us this full move, right? Because we don't have a trend entry here because the trend was already green. So you get you get 50% on the moon, 50% on the bottom of the 15-minute RSI, or the 1 hour trend, whichever comes first. And then we move on. And then here we have a scenario where we got a 1 hour entry, and then our second entry would have been basically off of the bottom of the 15-minute RSI, which would have put us here again if we didn't already collect our profits. But honestly, on this move here, we'd already collect our profits. And once again, we don't take entries if there's a 15-minute red moon. So this wouldn't be a second entry because the 15-minute red moon exists, right? So now the next part for us would be what? A 1 hour green moon, then a 15-minute pullback, or a 1 hour trend entry. Those are the two entries that we'll be going over. So we enter on a 1 hour moon, we enter on a 1 hour trend, or we enter early on a 15-minute RSI pullback bottom after the 1 hour moon. Okay, so we're going to get into the next video here and break this down a little bit further on this, but that is what you need to write down. So if you don't have a piece of paper and pad, this is where you need to, start taking your notes. And we should have mentioned that earlier, but how you get in this is you write this down. So there are two entries. You would be entering 50% of the bag on your first entry, which is a 1 hour green moon. Your second entry will be the 1 hour green trend or the 15-minute RSI bottom, whichever comes first. And those are the two entries that you make. So in video 5, we're going to go into a little more details on how to make sure that if you're getting into your entries earlier, that you understand that you're working with the volume as an indicator of how a coin will basically stay above or hold its support line and allow itself to build in there. And in your notebook, the main thing is that you don't do a long if you have a 15-minute, you don't do a second entry or pull an entry if you have a 15-minute red moon, or add to a position with a 15-minute red moon, because a 15-minute red moon means consolidation. So right now, XRP, as you can see, is consolidating right here, and we would be waiting for this, at least a 15-minute moon to say that, hey, by the way, there's a 15-minute moon, and XRP is finally looking to make an upward move. But right now, we're going to study the volume, and that will be in the next video, guys. So I appreciate it. Write those notes down. Go back, listen to this video again, and take notes again, and do the same thing with the main video. Start over, understand the 1 hour trade, write down what's important, and the steps that we take in order to make a trade so that you can follow those steps and learn to put them in your perspective so that way it makes sense in your mind, guys. Look forward to you here. We're going to do video 5 after this, and that'll be a more in-depth breakdown of the 15-minute trade into the lower 5-minute time frame so that you can see the momentum buildup of what we call volume, which is the only thing that matters, guys. All right, appreciate you. Look forward to the next video, man.